Venture capital firms have increasingly been acting like private equity firms. Makes sense. They've been scaling up by investing or buying mature businesses in need of a turnaround. Now those firms are utilizing another private equity strategy, rolling up multiple competitors into a single company that can operate more efficiently by combining costs. I skipped the next two, so you're going to have to skip a bunch of posts. Venture capital firms such as General Catalyst and 8VC are creating or investing in these types of holding companies in fields such as call center support, accounting, and property management. In contrast to PE-style roll-ups, the VC firms are starting companies or backing them before their businesses have proven themselves. To keep costs down, they're incorporating artificial intelligence software to take over work such as responding to tech support requests. So there's a few examples here. General Catalyst, which is invested in Canva and Stripe, helped start Long Lake Management and invested in the firm, which was co-founded by early Ramp director Zach Frankel. Long Lake aims to acquire numerous homeowners associations, the companies that govern and manage housing communities, and to use AI to automate operations and run them more efficiently, according to people with direct knowledge of the company. There are hundreds and thousands of HOAs across the country, according to the Foundation for Community Association Research. Do you have an HOA?
I do.
Would you prefer if it was run by AI?
I actually would. My HOA is fascinating. I knew some of the directors prior to buying my house because I lived in the neighborhood for almost 2 years before buying my house, just renting a place. And once I became a homeowner, I went to the first meeting and was very concerned. I actually wish I went to a meeting prior. But yeah, the thing about HOAs is they're highly, highly political, which doesn't really feel right.
Yep.
They don't necessarily make decisions that always follow the rules because it's sort of like a democracy where in my situation, nobody applied to become elected again. So every director just sort of extended their term. So that felt kind of a little bit like a dictatorship vibe. So talking to an AI might be,
certainly for some of the smaller things. I'm imagining like this might just be HOAs on like, okay, like there's a pothole on the street. Like we need to get a quorum. Everyone needs to vote and say, yeah, let's spend $1,000. Let's hire the contractor. Just go do that. Like that seems like the actual orchestration.
But I think what Long Lake is doing is it's rolling up HOA management companies, which means that you would still, and the HOA management companies provide infrastructure for the HOA. So you have the HOA board, which is the homeowners that volunteer to be on it.
Sure.
And then there's software to operate the HOA. In my case, it's getting something in the mail that says there's going to be a board meeting. You can come here and like vote using this form that you fill out.
Scheduling, voting. And
so I would love to, one of the issues I have with my HOA is that the younger people in the community don't fill out the physical forms and send them in. And so the votes end up being just very skewed towards what the elderly in the community want. Which can be frustrating at times.
So here's another example of one of these roll-ups, very different industry, but 8VC, known for early bets on Flexport and Anduril, in July led a $50 million round in Loop, which handles payments and financial audits for logistics businesses. And the co-founder is Matt McKinney. And he has a funny quote in here. He says, "I would have been laughed out of the room if I pitched VCs on the strategy to buy old payment providers. Since then," he said, "the strategy has become the hottest thing in Silicon Valley." And so they estimate there are 250 freight payment providers in the US, serving a market of about 15 billion. And they want to fine-tune AI agents and models and analyze data to help payment providers manage transportation and budgets and offer automated customer support. And so they've already acquired one freight payment provider and is in the process of purchasing another. And for a while, there were a couple startups that were trying to just build from scratch the payment providers, but there must be something very sticky about the relationships that it was hard to get traction, because some of those companies grew very quickly, got a couple deals, raised a bunch of money, but then kind of flatlined, I think. And so
what's happening here is venture capital has always been a part of the broader private equity industry.
Yep.
And now you're seeing this convergence. We saw the convergence of hedge funds and venture capital in 2021
Yep.
with you have these crossover funds that are investing in
Sure.
privates that presumably would go public soon.
And Sequoia changed to an RIA, starts investing in publics.
Yeah, and then you have
then the
now
crypto
you have
thing's
this
very
is the
public.
intersection of traditional private equity
Yep.
and venture, which there is a strong case for, right? Because you say, hey, why don't we combine these very smart technologists with this new emerging technology, generative AI? Why don't we give them hundreds of millions or in some cases billions of dollars to buy legacy companies and transform them? Because some of those legacy companies will adopt technology, but if you have a guy who's 70, been running a company for 30 years, maybe they're not that motivated to say, I'm going to let go of 3,000 people and replace them with agents. But that is seemingly what firms are doing, like WanderCo.
Yeah.
Jeffrey Katzenberg's.
I'm gonna read through that.
WanderCo, a venture firm and holding company co-founded by Hollywood studio veteran Jeffrey Katzenberg, started Quibi.
Yeah, put a lot of money in that from
in
WanderCo.
2023, invested in a 22-year-old call center, GlowTouch. Last year, WanderCo's investment helped the Louisville, Kentucky-based firm buy a 3,000-person, 20-year-old call center. So I imagine GlowTouch, now rebranded to Unify CX, is in the process of acquiring another call center and plans to buy others to combine them, according to CEO and founder Vidya Ravichandran. After buying the companies, it then incorporates AI to screen resumes for recruiting, automate support tickets, and speed up employee training and quality assurance checks. What they're not saying here is in the long run, I'm assuming they're going to let go of all the
call center
the vast
employees.
majority of the call center employees and replace them with AI.
Yeah.
99% of the companies out there in the space have really not even thought about AI. I have a portfolio company, wayfaster.com, that's building a lot of that, sort of recruiting, screening infrastructure specifically for staffing firms. And last year, Excel partner Peter Doyle left the storied VC firm after 9 years to start Treeline, a startup focused on automating IT services. Treeline plans to acquire other IT businesses. The startup has been in fundraising talks with investors like A16Z, according to people close to the business. The strategy is a shift from traditional venture bets in more ways than one. Venture investors have typically backed high-margin software or consumer internet businesses they hope will go public someday. In pursuing services firms, they are writing checks for lower-margin businesses that are unlikely. I mean, so this
TBD.
is very opinionated.
TBD.
So the information is saying that in pursuing services firm, they are writing checks for lower-margin businesses that are unlikely to yield the same high investment returns from going public as software companies.
Yeah.
Now, obviously, the thesis here is that you're going to be able to achieve software-like margins with services
because you're going to replace the services with software.
With AI agents.
Exactly. And so it actually makes perfect sense that this would be a VC strategy.
Yeah,
not
so
a
like
PE
Nick,
strategy.
Nick Abazid, he was at Ramp. He's now building an accounting and a tax prep firm, which presumably is, has a services component now, but will eventually automate more and more stuff over time. So there's this trade-off between buy versus build. You can start stuff from the ground up, or you can buy a business with $50 million in revenue and try to transform it. So
and
I think it's good that the concern, as you start looking to buy companies, right? There's a lot of competition among buyers. Private equity is not a under-optimized industry, right? If you ask, we're friends with people like Carry No Interest, right? Like, it's not like a nascent industry without killers in it.
And it's not like they're not paying attention to the AI wave. So the question and the bet here is, will VCs figure out the private equity model first and buy companies at the right price and then be able to put in the AI? Or will the private equity firms have an AI transformation operational partner who's really, really solid at squeezing more margin out of their companies more effectively? Like they're saying, this one founder says his firm's roll-up investment strategy was inspired by Berkshire Hathaway and Constellation Software, which operate portfolios of businesses they bought. Now, I don't know if Berkshire Hathaway is going to start replacing everything with AI in their entire portfolio, but Constellation Software has been optimizing software businesses for a long time. It's not like they're going to get caught flat-footed by the AI wave necessarily. And so the question is, will these VC firms that go into this industry be able to outcompete the private equity
the cool thing is that it's a simple strategy. Buy services firms and replace the human capital with software. very, very difficult to execute well.
Yep.
Very difficult to execute on a short timeline.
Yep.
The technology is evolving rapidly, but oftentimes when you buy a business, you have to show really rapid improvements. And private equity, if you talk to anybody that works in private equity or has been a private equity portfolio company CEO, the constant pressure from the actual fund, it's not like a VC on your board that is mad that you're not growing, to 5x a year.
Yeah.
It's why haven't you cut more people? It's very, very aggressive.
More cost.
It's more, old world finance.
And also, I mean, the VC firms are taking larger stakes here. Like General Catalyst aims to take 30 to 45% stakes in companies with like a holding company, which is very different from the 10 to 20% that you normally see. So much more control. And
it's also, so they say here, I think this is Drew from 8VC. He goes, one risk in the strategy is that acquiring a business that ends up floundering is more expensive than trying to grow through marketing or sales. So if you spend $50 million buying a firm and then it gets less profitable, then suddenly it's worth way less than 50, right? Because these businesses are valued on earnings. And that can be a lot more expensive than investing $10 million and just trying to grow a business quickly. Maybe you get it to that $50 million, but it didn't cost $50 million to acquire it. So mistakes become very expensive, much more expensive than venture capitalists are used to. So like, this is why private equity oftentimes has like a no zero policy. Like they're not going to let any of their bets, you might have a 1X where you just like tried to do something and you have to offload it after a few years. But no zeros, even many growth funds operate on a no zeros policy. So it's going to be fun to watch it play out.
It's fantastic.
If you're building a
Let's go to the related tweets about it. I want to see what people
we
have
got
to say.
Andrew Rea here, former employee of mine. Great dude.
Really?
He goes, prediction, the majority of tier 1 multi-stage funds will have buyout funds in the next 2 to 5 years. Soon, A16Z and Vista will compete to buy out companies. I'm actually kind of shocked that A16Z hasn't formally announced a buyout practice yet. General Catalyst is already quietly doing it, and not so quietly now. I don't know when this was posted. A few other less notable funds are opportunistically doing buyouts as part of their current strategies. This will become normal in venture sooner than later, especially if the IPO window stays shut and insurmountable for most companies. So yeah, I mean, one awesome part about the strategy, if you're in the capital management, the AUM business, is you can just deploy way more cash.
Totally.
One deal, you can deploy $100 million of,
and it's more focused, more concentrated, and then it actually makes sense for your partners to take board seats and really dig in on the business, as opposed to just I wrote a check to 25 companies in the last quarter, and I can't really check in with any of them because I got to hit the slopes.
And was this meant to be in here?
Yeah, that mentions Long Lake, and I thought it was an interesting post of like this mafia. So break it down.
So Patrick O'Shaughnessy says everyone talks about the PayPal mafia, not nearly enough talk about the Harvard or SPE mafia from the late 2000s.
It's a final club there. It's like a fraternity.
Oh, really?
Yeah.
Cool. Absolute Murderers Row. One class, David Haber, partner, GP at A16Z, Adam Katz, Irenic Capital, Alex Sloan, Garrett Station, Alex Tubman, Long Lake Management, and there's some guys from Bessemer, Cadence, Chris and Kushner from Thrive.
Yep.
So that's cool.
Very interesting how these like mafias form.
Then we have another post from Logan Kilpatrick. He says, hot take. I think there is a huge overinflated perception of how interested consumers are in having AI agents do shopping, browsing tasks for them. People generally want agents that will do the boring parts for them, but many of those tasks tend to be higher risk. So
this is kind of the flip side of the HOA. Like, do consumers actually want this? How perfect does it have to be before they're like, yes, I'm okay? Yeah. Because, like if you're talking to an actual person and they get kind of lost, it can almost be like educational and edifying to like work through the problem with them. But if you're on a phone tree and you're down the wrong path, it's like infuriating, right?
Yeah.
And or like if you're using the
agents
American
presumably
Airlines
replace
app,
the phone tree,
and maybe that's better. But when it gets frustrating, I think like
how many times I just do
the
you get on a phone tree and you just immediately start talk to a human, to a human, or in a chat you're just like talk to a human because you know that the bot's not going to actually solve your issue. Hopefully that changes over time.